Hey friends, this is Martin from CUT, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the previous week and also plan for a better trading week that's starting from tomorrow, June 9th, Monday 2025. Let's deep dive into the charts. Here we go. This is the weekly charts of the Nifty that you see on the left, and right is the Nifty dailies, and here Banknifty is there, left weekly, right daily. So clearly market is on a recovery mode. Was pausing for 2 weeks and now seems to be attempting to break out once again, and now we're going to go towards the top of the trend line channel. On the short term charts, you see the channel is at this point of the top of its daily trend line channel, and probably maybe attempt to break out from here. While Banknifty is ascending wedge, price is reaching almost on top of that ascending wedge. While on the daily charts, it's heading towards a little more space that's at the top of the daily trend line channels. So that's the short term story. What exactly happened was a 254 points up, that's 1% up move that happened. Market broke out. Banknifty also broke out, but made new all-time highs while doing that, and it was 800 plus points. It's 1.5% nearly. And remember, we had been having a correction of 17 to 12.5% overall, and then it's a 70% rally in between that. This 17.5 and 12.5% of correction had happened, and the market is in the recovery mode, trying to go back to the place where it all correction started, and then probably move further ahead of that. That's what it looks like. But let's try to understand from the charts what exactly the candlestick patterns are showing. It's a solid bullish, engulfing the previous candle's body completely, even if it's not doing that for the wick. But it's you can say it's an engulfing candle, a bullish nature, extremely bullish weekly candle decision for Nifty, and the Banknifty also even more extremely breakout bullish candle is seen, wide range bullish candle. So no doubt about medium term candlestick wise bullishness. And the daily charts on the left of Nifty and right Banknifty showing that the 5 days move is a hockey stick kind of moves. Market took a dip and capped up for 2 days, and on the RBI rate cut day of Friday, it absolutely broke out. Same with Banknifty also, hockey stick move, V-shaped move, whatever I call it. More of a hockey stick than a V-shape. So small dip and then a big breakout. So no doubt about the bullishness from the candlestick. Bullish bands is where it slightly stands out different this time, even though the candlestick move is showing clear bullishness. And make a note that the bullish bands have not started expanding. That means we need a confirmation candle in the next week, which could indicate whether upside moves can be expected or not. But as of now, it's consolidation with the bullish bias is what the Nifty and the Banknifty daily charts. So the bullish bands are showing. Even though the Banknifty also expansion has not started, even with the mega bullish candle. So we'll have to wait for the next day's candles close to see if the bullish bands are changing that. Make note of that. That's the only slightly different story that you can read from the technical charts this week. Moving ahead, if you try to understand the momentum and the trend, the momentum using the RSI and the trend using the ADX indicators on multi-time frames, weekly and daily, left side weekly on both indices, if you see that it's bullish rising, short term also bullish rising. So momentum is absolutely bullish. About the ADX is indicating that it was already turned to bullishness, but not on the multiple time frames on both indices. So bullishness is confirmed this week on the ADX indicator, the trend indicator. So the trend is positive and bullish, and momentum is also bullish. So overall bullishness is what these indicators are saying to us. Right side, what you see is chart of the India VIX. We can see a clear dip of 9%. That's a clear cooler of that happened. Remember that this spike happened following the Trump tariff calls, and then again the India tensions, border tensions and conflicts and all that came in, and it spiked up as high as 22, and now it had substantially dropped nearly 20%, we can say, nearly. So that 10% near by fall is what happened the last week, which is very, very cool for the bulls, right? it's at 14.60, that's below 15, which shows that it has fallen from the high volatility regime to the low, not low, medium. Low would mean for the most drop to happen towards probably another 3-4% drop. It happens, you can say it's long volatility, but as of now it's falling from that high volatility, and that's happening when the market is rising up and breaking out is quite bullish indeed. That's about the momentum in the candlesticks and all that. Let's try to understand from the derivative F&O perspective the open interest analysis of the futures and the options. For the futures RI, it's long build-up that is shown on the Friday's build-up on both indices, so bullishness there. Open interest on the options for the weekly expiry of the June 12th on the Nifty and the monthly expiry of the Banknifty. Expiries, the charts can be seen on the left side or on the downside. Nifty and the Banknifty, it shows that huge resistance seems to be there for the Nifty and Banknifty, probably at 26,000, and support is seen at 25,000. So it build-up is seen there, but PCR is what we normally look at for the option, so I should understand if it's bullish or not. That has climbed above the 1, which means that it's bullishness back, both indices. So derivative side, so options, F&O side, for the open interest perspective, it's bullishness. And that open interest charts is what is put in there for the options, and this is one way of understanding the resistances and the supports, based on how the call writing and put writing is done by the big players in the options. So accordingly, 25,000 and 25,000 very narrow range is what can be expected for the next week, but still 4 more days things could change, keep that in mind. But as of now, the highest put writing is at 25,000 and highest resistance is at 25,500. Now the second highest put and call writing is at 24,700 and 25,000. So 25,000 is a very pivot point. Make note of that. If market is able to hold that, things are fine. If market is going to pull back, again 24,000 is going to be harder further ahead, and market is breaking out, all this. So 24,000 is going to be crucial at very narrow range for the week. On the Nifty's weekly expired, but Bank Nifty is a monthly expired figure that you're seeing, that shows that the range is 56,000 is going to be the crucial point where the highest put and call writing is seen. Second highest put and call writing is at 55,500 and 57,000, not too far. There is also a narrow range, you can say. But PCR in the future, so I as well bullish, you can see that. So that way we found some approximate levels of support resistance where the heavy bidding is done with option writers. Now another way to look at and find the exact points of resistance and supports is using the technical charts. So there we use the different parameters like the gap resistances, the previous resistance zone, previous support zones, and previous swing highs, and daily expansion moving averages of 20, 100, 50, 200 and all that, and several technical parameters, Fibonacci levels of 61, 50, 38, 23 likewise. So all these are used, combination of that. According to all the Nifty charts that you see, you can find some resistance to come into play very close by. It's almost like the 25,000, you can say, close about that, but 25,000 will be the first resistance. Then 25,105 would be the Fibonacci 23 and the previous swing highs. It's very close by, and it had already taken that out once, so taking it once again would be an issue. So that resistance may clearly get taken out, but then next level of resistance would be 25,333. It's near to the 25,500. That's where the channel top is coming. Any breakouts from here would mean that the next resistance would come in at 25,740, and then 25,850 is where the previous resistance is there, and after that all-time highs of 26,277 would come in if the 26,000 rounding number resistance also is taken out. That's how it's on the upside downside. And first good support at 20 exponential moving average can come into play, and that will be somewhere close to 24,700. that zones. That is breached, then next major support will be the 50 exponential moving average, right? And then eventually the gap is also coming there. That's all close by the 25,000. 25,000 will be the major support, right? And that's how it goes. So all these levels are mentioned here in here. We can make a note of that. And if you also likewise seems to be in a very long trend line now and almost hitting the top of that, so it could head towards the 57,000 easily, and from there resistance could come in play because the trend line chop and breakouts, if it happens, could take it to 58 as well for next week, possible. If the kind of moves that it made last Friday, if it continues, then 58,000 is not very far. So downside, the first support will come in at 55,381 level, where the 20 exponential moving average is there. And after that, the previous swing low is at 54. Swing high is at 54,467. Could act a good support because that's where the first breakout happened. Then 50 exponential moving averages, 100 exponential moving averages, 200 exponential moving averages are all supports downside. A lot of good supports. Right now it's in the breaking mode, and keep that in mind that you have a resistance of the trendline channel here on the Banknifty, and the trendline channel on the Nifty as well, very close by. So it was broken out, but still it is headed to another resistance zone. So make note of all these levels, correlate that with the options based levels, and then take your positions on the support side or resistance side. Let's move ahead and see what the sectoral indices are saying us. The major sector indices showing that it is a good breakout recovery, or positive move, especially on the reality, where it moved 9.5% up. But the IT sector is the only sector that is close flat, is down, absolute flat, IT sector. And the only sector that's good enough to go long is the reality sector as of now, which is multi-time frame bullish as with the momentum on the weekly and the daily. Otherwise, you can see this positive moves that happened last week. 2% good move from metal, auto 1.5%, 1% pharmacy up, 1% FMCG up, and 9.5% reality up. So the sector indices have recovered, and others are waiting. Except other than the reality, the sector and major indices are trying to climb up into the bull zones, but as of now, just not yet. Charts showing that it's IT sector that's remaining flattish, but it can easily go. There is a potential for it to find some more resistance in the flag at the trendline channel top. So the IT is facing a lot of uncertainties from the US tariff, no news flows, and then the outsourcing and work. Shift in the nature of the work because of the artificial intelligence and all that. So that's what is causing the IT prices, which always used to perform very well whenever the other sectors are doing bad. The defensive stocks, so to say, what we call the IT and the pharma. So those are not doing that great, especially the IT is not that great because of the reasons that I stated above. But it doesn't mean that it is in the bear zone now. It has also climbed back and then finding a sideways move. But the metal, you can see that it has recovered and then trying to head towards the top of the trendline channel. Same way, but also is facing some challenges. But looks like it is made a close. It didn't close, but facing some resistance. But once it recovers, it has scope to go towards the top of the trendline channel. Pharma is also closing green sideways. So metal, pharma, auto, actually all of them are sideways except the reality as of now, but it is maintaining the sideways is what we have to keep in mind. It is still not climbed in the bull zones yet. Even the FMC also is in the sideways zone, but remember it was during the correction it had fallen down to the bear zones, all of these, and now it is climbing back, and the first recovery into the bull zones is taking place from the reality sector indices. Now look at the different heavyweight stocks. So these are the stocks, the 6 or 7 stocks that contribute maximum to the Nifty index. But any big moves that happens here will reflect in the index. That's why you're analyzing that. So for that, you see that there was a breakout pattern that happened on the HDFC Bank, which is the biggest contributor to the index. Solid bullish candle, but remember it's at a trend line top. So resistance could come in. Any breakout from here could take Banknifty once again to new highs. Any reversals from here could take Banknifty to a reversal mode. So it's a resistance zone as well, although it's absolute bullish news flow that's there. So Reliance Industries, solid bullish candle, almost engulfing the previous week's candle, and then looks like it may be attempting to head towards the top of the trendline channel, towards the 1,600, 650, 700, that zones. Is a bank very close to the all-time high, but also very close to the long trend line chart, so could face some resistance, but momentum trend is bullish. So all of these three stocks, HDFC Bank, Reliance, and the ICICI Bank, are having bullish momentum, and also some other crucial resistance. So what is not done that great is the two stocks, it's IT stocks, Infosys and TCS, which is in the sideways, and then in between it is giving signals that it could fall back to bearish momentum as well. So there's some trouble in these two IT stocks. Bank as usual consolidating in that range. ITC also consolidating. FMCG giant is consolidating, but ITC overall is a stock that does not break out constantly, but consolidates and then takes its own sweet time to break out. So that's the nature of the stock. So what is doing good is these three stocks, and those three are the heavyweights that's moving the market, and two of them is banking giants and one is Reliance. That's the story about heavyweights. Now if you look at the broader markets, that is the mid cap index and the small cap, you can see that last week it was bullish move and momentum was climbing. The bulls also after a long time correction into these two indices as well. So the market move is not just in the indices, it is across the broader market is what we can understand, especially if you look at the candlestick bullishness that is seen in the charts of the small cap index on the right side. So that's also positive. Now if we try to understand how the institutional participation happened last week, despite all the big buying, it was 3,500 crores of selling that happened in the foreign institutions last week. It was domestic institutions which was buying 25,000 crores more. So foreign institutions, although the selling has reduced as compared to the several weeks before, they are not seriously back with heavy buying yet. They did that for a few weeks and then started selling in small quantity. So this also has come in to have a confirmation breakout. For a rally, the institutional money is required, and you need to see consistent flow of foreign money to come in before we can see a rally. Otherwise, if we only have fire buying and then profit booking, and it will be very choppy. The fire buying would mean breakouts. Fire buying did come on Friday, probably, but week-to-week basis, if you see, they ended up net sellers. Derivatives flying, the Friday has slightly moved up. You can see that. So let's now try to understand how the global cues are there in the global markets, and currencies and commodities and all that. So currencies have dollar is slightly down. If you look at the charts over here, it has been correcting. Dollar index is slightly down, which is not less than 100, and it's good news for emerging market like ours, dollar dependent markets. And our currency, the US dollar, has spiked up and currency has become slightly weaker. It is still above the 85, but last week, slightly up, but dollar is slightly down. Our currency moves, our USD move is not directly dependent on dollar index, but dollar is cooled off, but currency has lost a little bit. Rupee currency I'm talking about, right? Now crude oil has spiked up nearly 7%. That's a big spike up, but I'm not sure of the fundamental news behind that spike up, but still it's in the 64.7, not that bad for all important country like ours. It's still a long way to go before we have a threat of a breakout from this channel where it is holding for a long time. Right side, you have the gold, which seems to be consolidating or slightly trying to correct, but look at the moment of the gold, it's still bullish. Gold actually moved nearly 0.7%, less than 1%, but gold is still doing good. It is just profit booking. It's not ready to. It's consolidating. It's not correcting. Price. Although several rating agencies are saying that the gold may do some correction after this big moves and the US tariff news flow cool-offs and bromance between Trump and Elon Musk and all that could turn around things, and gold could do some correction, but it is not seen as of now. But that could be expected, is what the rating agencies are saying. The charts are saying is gold is absolutely bullish with respect to the momentum, and is just consolidating or profit is what is happening in the price of gold. So gold is primarily used as hedging instrument in several trading businesses, and even in the options and derivative side, we use gold to hedge our portfolios. So that way, gold rising up is one way good to balance if there is any corrections that comes in. But the gold, staying in that level would mean that people are hesitant to put in more money into the equity markets. So that's something we have to keep in mind. But moving ahead, if you try to see the global markets, that's the US market primarily, the mother market, you see the Drawdowns and Nasdaq and S&P 500, all of them are close green, but they have not climbed in the bull zones yet. Recovering on the way, less like our Nifty, recovering, but not yet recovered 100%. But it's a clean close of nearly 1% to 2% up when it comes to the Dow Jones, Nasdaq, and S&P 500. Otherwise, rising sideways. So that's US market. So overall, if you see the global cues are not that bad, although crude oil is back slightly. Overall, so the global cues are positive, we can say. Although there are some tensions that has cooled off with respect to the tariffs and all that, but that fear slightly is still remaining there. Is what we can understand. So let's now move ahead and have some actionables, and actionable in the sense for educational purpose, not for trading assets. Trade at your own risk because it's your money, it's your risk, and it's your plan that you are executing. And these are educational purpose videos, but they are called actionables because they are potentially, just to make you understand that how do we take a call on the long side or short side. Right now, what you see here is Manappuram Finance. You all know that there is an RBI decision to have the LTVs increased to bring more business to the world, but at the same time, gold is at an all-time high level. So there could be some positiveness that could come in here, but that is what I expect from a breakout from this channel possibility. Have tight stop losses though, but technically reasons for the breakout is good volumes and momentum, bull zones rising up and the trend bullish, and the price at a breakout point of the channel top. So have tight stop loss because when everyone expects and run behind the gold or one particular news, it may have already been sold out already, discounted already, and we may be too late from the retail perspective. So have tight stop loss always. Now prestige real estate, you know that real estate index did particularly well, almost 10% more is what happened last Fridays, because the real estate ultimately will benefit from the loan EMIs gets reduced. That was what the rate cut was, focused on last week. So prestige real estate, it's a flag pattern, a small flag you can see in the second flag, and the breakout from here could target move as much as height of that. So once you do the score, can we look forward for a swing trade, book your stop loss and trail. Means put your stop losses tight to the previous week candle and book your profits and set the trailing targets if it breaks out further. And 1 is 2 is what we can probably look forward. The reason for the technical reason for the trade is good volumes and momentum indicator showing bullishness rising and trend indicator showing rising bullishness again. So 2 stock picks for the next week: Manappuram Finance and Prestige Estate. One is gold and the other is real estate. We are picked up the stocks for these two, right? Because gold is a commodity and real estate is another asset class. Gold, so we're talking about 3 asset classes here. So let's move ahead and have some actionable on the FNO side as well. It's a Batman strategy. Once again here, unhedged. If you want to get hedged by buying put and call on both sides, but this one is unhedged, but it's giving a reasonably good probability profit and a very reasonable risk reward as per the levels that we've studied. So as long as market remains between 24,000 and 24,500, we're fine. We could make reasonable profit with good probability profit as well. So basically, it's a Batman strategy. We are selling put and call in OTMs, and inside OTM, the basically double of what we are buying. Inside hedge OTM buy yields also there to cover the risk. We'll have less profit at some range, and if it breaks out that range again, we'll have more profit. But once that is all broken, unless we don't have any, unless and until we have some additional outside hedges also taken, we'll get risk. At that point in time, just exit at loss, book up loss. Don't try to roll in and roll out. Risky. But yeah, this is the best way that we can get on a weekly to have a reasonably good percentage of return for investment if you consider all other different strategies the iron condors and are not giving enough profit, and unhedged risky triangular strategies are too risky and too risky for the profit that we look forward, considering the volatility is still not that really low. Okay, so that's the FNO strategy, weekly Nifty options trading strategy. Let's try to wrap it up. So hockey stick move is what we can say the last week, especially Banknifty was making new all-time highs, while Nifty is another 1,000 points far away from that below. So it's all happened with the RBI rate cut of 50 basis points happened last Friday, and the market ended positive momentum, and the trend turned to bullishness once again. But if I still ended up net sellers. Remember, we had a 17.5 and 12.5 kind of correction that happened in the indexes, but this was after a 70% brutal rally that happened from 2022. So in order to further come to a conclusion of the market views, we'll have to put in different buckets on those parameters technically which are in favor of the bulls and those which are in favor of the bears. So the more parameters seems to be lying in the favor of the bulls this week, because US markets have closed green. India weeks has ticked nearly 10%, 9% actually, and options OI is bullish, futures OI is bullish, on both the indices it is bullish. Bollinger Bands are having bullish bias on the daily because it's above the median of the Bollinger Bands, and crude oil is still low, even though it has spiked up to 7% or something. And the moment of the trend indicator, we already seen that our side index is showing bullishness on both indices. Heavyweight major stocks, we see the HDFCs and Reliance, NSE banks are all rocking bullish zones. Except the idea, all the other indices and the heavyweights are doing extremely good. Although sector indices are still not ready to be to fully longish, because it's still in the sideways motion except for the reality. We've seen that, and 28,200 expansion will give our price point. Broader market is also bullish, so all factors in favor of the bulls. No, what's in favor of the bears? The fact that the price is not participating as required, but as expected. So keep that in mind that we could take long positions, but a tight stop losses, because the breakout is not at confirmed and we are close to a very big resistance, especially with Nifty and Banknifty. It's all-time high, so can't say anything much on that. So it's always going on in investing whenever getting a dip. So global cues like the US tariffs and the trade war and all that, still the uncertainty is there. The volatility could pop in, could rise up, VIX could happen once again, although it's cooled off 10% last few weeks. So technically, I would say the market is mild bullish. Market wants to break out with the volatility dipping and all that. The global cues are also cooling off. US tariff news and all that could bring the volatility once again because of some crazy announcements that could come in. It's out of technical analysis. Keep that in mind. So 24,000, 25,500 is the level I'm looking for the Nifty next week, and 54 to 57 is the level that I look for from the Bank Nifty. So keep in mind, if it is climbing above the 26,000 or heading towards that, and then climbing above that, and Bank Nifty is climbing above 57, would mean the next leg of rally is on the way. And as long as it does not happen, it's still consolidation is what we can understand. Keep in mind, Bollinger Bands is still not expanding on the upside. Wait for that, for bullishness to get confirmed. That's it, and keep in mind, always hedge your positions, hedge your portfolio. Must. Risk management is all that trading is all about. Protect your capital no matter what. And you can also use this hedging strategies and using options. You can make money with the rental incomes also by playing on the opposite side. Check out the playlist for the covered calls and cash target puts and all that different strategies as well. That's all I have. If you like the content, subscribe, hit the like button, and then put your comment and feedback and all that, and share it to others if you like it. I'm also active on X regularly on daily basis, where I put in technical analysis bits. So subscribe to that as well if you would like. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.